The volume profile give me the right bias 90% of the time, and I've never seen any other traders use it the way that I do. And honestly, after watching this video, I don't think you'll ever look at a candlestick chart the same way ever again. But before I show you how to use it, I want to talk about something that most people underestimate, and it's basically why price move. Most of y'all trade the market, but y'all don't really know what's making the market go up or down. And I think it's very important for you to understand that before even placing any position. For you to really understand how price move and what's causing price to go up or down, you need to look at a cluster chart. Most of y'all are usually used to these kind of candles, which is the normal candlestick that everybody uses. But you get a lot more insight and a little bit more understanding when you get used to footprint charts. So what the footprint chart is showing you is every orders that took place at this specific price. So, or let's say that this price was, for an example, let's just say 1. That's the price, right? So left side, as you can see here, represents sellers. So on this left side here is all selling contracts, right? So at this price point here, which is $1, right? 2,100 contracts got executed from buyers and 1,800 contracts got executed by sellers. And there's a lot of things you can do with that information. What people will usually do is they will take both of these numbers and then they will subtract them, and then it will give them like the difference between buyers and sellers. Let's say it's 1,000 for an example, right? And according to that, if buyers are more aggressive at a specific point, they will take advantage of that. But I need to make another video about the footprint, but this is just for another video because there's a lot of stuff I really need to cover on the footprint for you to really understand. But what I'm trying to show you right now is just what is costing the price to move up or down. So every time someone buy the market in algo, whatever, it gets added to the book. Bleep, it gets added. Like we could literally run the test and freaking like look at the DOM, take the DOM and every orders that's coming in. Guys, if y'all not used to order flow or market auction theory and all of that, make sure you subscribe. I'm going to drop a lot of knowledge so you can understand more, because I'm talking about some stuff that you're probably not used to here. So if I take the DOM and we literally look at every orders coming in the market, you will literally see every time this candle is going up a little bit, you will see 1 contracts getting added, or 10 or 20 or whatever, how much contract is getting executed at this time. Like you can literally see it happen on the candle going up and down, whether it's selling contracts or buying contracts. The video that I'm going to do explaining to y'all how to use the footprint chart, I'm about to show y'all exactly that this is how price move, guys. Like I wish I had the time to go on Sierra chart and open my footprint chart and show y'all every buy orders, market is going up. I wish I could do that, but we don't have enough time. So I hope now you kind of believe me a little bit more when I tell you market is moved by market orders, right? And for you to understand the volume profile, you really need to understand this first, because if you don't know what makes the market move, you don't know what creates the volume profile. Now this is what's leading me next to how the volume profile is actually made. What is the volume profile made of? Let's say that, so y'all know that I like to place my volume profile over the overnight session, which is from 4 p.m. until 9:30 the next morning. And I'm actually about to go on the chart to show y'all exactly and give y'all some trade example. Give me a second here. I just want to give y'all the knowledge first. Let's say that this candle here is one big candle. Let's say it's a 1 hour time frame candle, right? And let's say that you place your volume profile over the last hour candle, which is this one right there. So let's act like we're actually placing the volume profile over this candle, and it should give us something like this. And sorry guys, I'm really bad at drawing, so be patient with me here. So this is our volume profile. So this is our value area high and this is our value area low, right? So, and now I'm really about to show y'all what is actually building these levels that you're seeing on your volume profile here. What is actually building these? So the volume profile essentially is just one tool that's registering all the orders that are taking place. So all these orders that are taking place here on the footprint chart, it's getting registered to the volume profile. Every time, the volume profile is just a tool to register every orders that's coming in the market. So let's say that, so you remember we're only measuring the last 1 hour time frame. So this candle is a 1 hour time frame. And I'm about to show that on the chart. So just stick with me. I just want you to understand how is the volume profile formed. The open of the candle is right there, right? So the 1 hour started to trade around there. And we have 1,100 contracts, buying contracts, and 1,400 selling contract here. So you add those two together and it will give you this here on the volume profile. Then market moves up, more contracts are coming in. The volume profile is starting to build. Of course, it will not look like this from the jump, right? It's going to build its way up. We have 2,400 contracts plus 2,400. These are a lot. This is where the most amount of contract have been trading. So your VPAC would be around this area here. So this is how volume profile is created. You take the amount of buy contracts plus the amount of selling contracts, you add them together and it will give you how much. So these would, like 0 plus 71 will look something like this, you know, and 2,100 plus 1,800 will look something more like this, you know, a little bit bigger. This here, of course, will have the most amount of volume, so it will be like, you see. And let me just actually delete that, and I'm actually going to show you how a volume profile could actually look like with real. So let me just delete that, and let's say we had some more contracts here coming. These are not a lot, so probably look like this, probably look like this. This will probably also look like this. And here we have big volumes, boom, big here. And then we have little volumes here, boom, boom. So your volume profile would look something like this. This is how the volume profile is created. So this indicator you're looking at here, this is how it was created. And I could literally do the test. I could go on Sierra Chart, which is my order flow platform, do the same thing. Take a big footprint candle, put it to the side here, right? Put it to the side like we just did. And look at the volume profile, all the orders that's coming in the footprint, and look at it on the volume profile. You will see the same thing that I just showed y'all, which is buying contracts plus selling contracts getting added together. That's creating your volume profile. I will do a deeper dive on the volume profile next week. I'm actually launching a free live masterclass, a 1 hour masterclass explaining more details about the volume profile, because you actually need to understand this type of stuff to actually be able to make money, not just use it like an indicator, right? So if you want access to that, I'll drop the link in the description so you can register for the 10. Now it's time for me to show you how to place the volume profile, how to, like, where do you measure? Because a lot of people struggle with that. They don't know where to place the volume profile, where to start it from, and where to end it. And actually, it took me a lot of time to figure out how to do that myself, because I had the same issue. And I found a way that I've never seen any other traders on this platform actually use to measure. I've never seen any other traders use the volume profile the way that I use it. I've seen traders use low volume nodes, trade off value area highs, value area lows, but I've never seen someone use it the way that I do and have such high accuracy identifying daily bias. And so the way you want to place your volume profile. So regular trading session, or from 9:30 until 4 p.m. afternoon. These are regular trading session. Like this is how it used to be back in the days. Like real trading hours, regular trading hours are from 9:30 until 4 p.m. Not until 6, right? A lot of people might think that, but no, regular trading hours where the most amount of volume have been transacted in New York, which is regular trading hours, is from 9:30 until 4. So what you want to do for the next session is you want to measure the overnight value area. And if you want to measure the overnight value area, you have to start your volume profile from either 4 p.m. in the afternoon, right? Or 4:30. I started at 4:30 or 4 sometime. It depends. Guys, These levels are not magic levels. Stop. Like it's if you place it from 4 or 430, you're only going to get like a slight difference in price, like 0 points, like a tick, you know, two ticks difference. You know, it's not that deep. So I like to place it either from 4 or 430. I've found that 430 is what's bringing me the most accuracy. So I stick with 430 until 9. Guys, I'm bad at drawing. Sorry. 9:29 the next morning. So you place your volume profile from 4 until 9:29 the next morning, and I'm about to show you exactly how to do that. So you take your volume profile, go in the, I like to go in the 1 minute time frame. Don't go in the 15-minute time frame like I'm doing it right now, guys. I'm going quick, right? Go in the 1 minute time frame, go on the 4-hour candle. Let me find it. Okay, there you go. And then I took the wrong tool, sorry. So you take the 4-hour candle, right? 4 is right there, and you drag it all the way to 9:29. I'm gonna draw it to 9:15 because I'm on the 15-minute time frame. I would need to go on the 1 minute time frame to actually have the most accuracy. So boom, place the volume profile, and then it will give you your overnight value area. All right, which is right there. This is your overnight value area, and you want to mark that after 9:30. And what I like to do at 9:30, I always like to wait for the first 15 minutes of action to close before I look to place any trades. And of course, there's confirmation I will look for before taking any trade. But for this video, I'm only talking about the volume profile. I'll have to make another video explaining everything. That's why I'm telling you, if you're new to the channel, subscribe. I'm actually going to expose a lot of stuff. So after 9:30, right? 9:30 is around there, right? So this candle here, I think, was 9:30, right? And boom. What you want to wait for, you want to wait for price to either have acceptance above value area or below value area to take some trade. You don't want to be placing positions inside of this area here. And a lot of y'all gonna be like, oh, but Guala, yo, we actually had acceptance, 15-minute close outside overnight value. Like, well, why didn't you take the trade? This is a losing trade. You need to wait for confirmation. There's a lot of stuff that I look for before placing a position or actually be like, oh, we're bullish, right? But these are not the subject. I'll have to cover it in another video. For now, I'm just showing you how I get a 90% accuracy identifying daily bias with the volume profile. And how I do that is I will wait for 15-minute closes like these here. But the other confirmation I wait for is CVD. I want to see if CVD is positive or negative. So what the CVD is, another subject. You see, it's for another video. I'll have to do another video, but a quick recap on what CVD is. CVD stands for cumulative volume delta. So it's the difference between buyers and sellers contracts. There's the difference between them. And if I see that we're having acceptance above overnight value area high and CVD is positive, which means that there's more net long contracts in the market than selling, I will be like, we're bullish. But here, CVD was negative. So I knew this was a fake move. And there's a way you can take advantage of that when price is positive, but CVD is negative. But this is for another video. So after this candle here at 10, right, we sold and we ended up having acceptance below overnight value area low, and CVD was actually negative. After having acceptance below overnight value area low, what I like to do is I like to look for simple support and resistance zone, low volume node, whatever you want to call it. If you trade fair value gaps or whatever, you can still use this technique to get your direction and take your entries off of fair value gaps. So, but I'm about to show you how I actually enter the market. So I'll actually use basic support and resistance level. So this level was the zone that I wanted to get in the trade at. So I placed the zone here, and I remember my entry was around I can still see the trade. My entry was around there. So now I will show y'all what I look at for confirmation before actually pressing the button and taking the trade. After I got my direction, I got my zone, there's only one thing I look for before taking this trade, right? And if I'm looking for a sell, What I want to see is, as price is coming back to the zone here, right? What I want to see is, I want to see sellers getting, sorry, if we're selling, I want to see buyers getting aggressive while we're getting to the zone. I wanted buyers to be really aggressive on this market because I want them to get trapped. So what I look for them to, how I see if they're trapped or not, I look at my CVD. If I see that buyers are buying way more than actually the candles is actually buying, buyers are trapped. If I see buyers too aggressive and price is not really reacting that way, this tells me that buyers are getting trapped and I need to take sell position. Because if buyers are trapped, let's say me and you bought the market. For us to exit the market, if you trade futures, if you place your stop loss below a low and you bought the market, for you to get stopped out at this price, you have to sell the market. It's a sell stop, right? It's a sell stop. It's stopping you out. This is what's happening when you're getting stopped out of a buy position. So me understanding that if buyers are trapped and they want to exit the market, what they will have to do now, they will have to sell the market. And what is the market moved by? Market orders. So if sellers are aggressive or exiting the market because they're scared they're gonna lose too much money now, it's in my favor because I'm selling and I want them to sell with me. This is the exact mechanism behind me getting the right bias 90% of the time. My win rate is not 90%, but understanding where the market is going is one of the most important things you can know how to do as a trader. I'm not asking to be right every time about my trades, but when I understand actually how the market is moving and I actually get an understanding and real like a back end view of things, bro, it just gives me more confidence. Like, guys, this is actually what's going on. Like, markets being moved by market orders. Once this click, you'll stop questioning everything and just get like a bigger understanding about the market and get a feel for the market. So that's it for me, guys. If you like the video, make sure you like, make sure you subscribe. And if you want this exact strategy, I actually created a full checklist with this exact playbook showing you exactly how to place the volume profile, what to look at in order flow before taking your trade. Everything I just showed y'all, but just in a little checklist. So I'm gonna drop that in the description. You can get that. And if you actually want to get mentored one-on-one by me, I'll also drop the link so you can apply and see if you qualify to work with me. Other than that, I'll see you in the next video. Take care.